Hi traders, Luca Santos here from ACY Securities Technical Market Analyst, and today, this morning 11:30, we have the release of Australian CPI year over year. Well, I have the data in front of my hands, and the previous CPI was at 6.8%, right? So we did have CPI in Australia last month as consensus expected. Well, the forecast for this month was at 6.1%, meaning that if you see the consensus at, let's say, 6.1%, and we see that the actual comes in higher than the consensus, then we can expect a stronger Australian dollar. But this didn't really happen here, folks. What did happen is that the actual came at 5.6. What that means is that Australian dollar is very, very weak, all right, at the moment. I would say that it's same as JPY, but not that weak, because we still have RBA, the Reserve Bank of Australia, may continue to hike. Why is that? Well, because we have two CPIs, right? We have the year over year and we have the month over month. I'm not saying that the year over year doesn't have importance to the RBA, that is the central bank, but the month over month has more importance because we can feel it more stronger, and we can feel it on the daily routine than the year over year, right? So if we see next month the CPI month over month comes higher than 5.6%, then we have a problem. Then RBA will come and continue to hike. Remember when they spoke to you guys a few weeks back, that once we have higher CPI, once the inflation is high into the country, we need higher rates to try to control the inflation, so then the economy doesn't get burned. All right? So I think we need to stay tuned into the CPI next month and check the month over month. If it comes more than the consensus, then we can make sure that probably a higher probability of the central bank, the RBA, raise rates will come across. Otherwise, we don't have to worry, and Australia will maybe pause the rates. All right, folks? So trade safe, and I see you next week.